Chainlink price prediction and technical analysis. And as you guys can see at this point in time, we are indeed on the monthly chart. And on the monthly chart, we can see that in the past, the market had given us a double top over here. And what it is actually is an overextended double top, as that first leg is much higher than that second leg, and the very same structure has a neckline more or less at that point. And you guys know that whenever we have these patterns, we want to see price ideally closing below the neckline, and then in the future come back to the neckline to give it a test. And where that neckline is generally where we look for those potential sell opportunities, right? And that's exactly what happened, where we saw the market at this point closing below the neckline, and then in the future come back to the neckline to give it a test. And as I said, at that point where the neckline is where I believe a lot of us should have looked for potential sell opportunities, right? And remember, guys, that this particular double top started here. We saw the market move up, give us the M structure, close below the neckline, went back to the structure again, and ideally we want to see the market actually move further down to around that level to pretty much close in line with where that structure had started. I hope you guys can see that, right? That's what we want to see happen ideally. However, we can also see that as much as we have this overextended double top, the market had also given us what seems to be a double structure here, which similarly has a neckline at that point. And again, whenever it comes to these structures, we want to see the market come back rather close above the neckline, and then come back to the very same area to test it out. And at that point is where we may look for potential buy opportunities, especially if it aligns with any key numbers that we may have in regards to the Fibonacci retracement tool, right? So as I said, guys, it is quite possible that the market may come all the way to that level, which is a very strong level of support at this point in time, and also the neckline of that W structure. And at that point is where again we may potentially see the market actually move further up, right? What else do we see, guys, in regards to the monthly chart? Another thing that I see, let me just actually zoom in, is that as much as I'm saying that we have a W formation here, just keep in mind that we have this candlestick over here, and as you guys can see, it is a bearish candlestick with a small body and quite a long lower wick. And you know that it means we have a lot of liquidity at the bottom where it ends, and that liquidity represents money, and that money needs to be triggered by the market at one point or another. So what am I saying? So what I'm saying in other words is that yes, it is quite possible that the market may come to this level, which is a very strong level of support, to test it. And instead of actually bouncing off of that level and moving further up, we may see it actually move further down to trigger the liquidity associated with that candlestick over here, right? And then once that's done, we may potentially see the market move further up. The last point that I want to make in regards to this W structure over here is that, remember, guys, whenever we have these, what happens quite often is that traders and investors buy on that second leg, and they place their stop losses just below that structure, right? So this means we have a lot of liquidity stuck here in the form of stop losses, as I said, a lot of traders and investors actually bought at that point and placing their stop losses just below here, right? So again, we may see price actually move all the way down to that level to, remember, grab the liquidity associated with this candlestick, as well as to grab the stop losses located here, in addition to actually completing this, if I can just mark it, this double top. Because remember I said that it started around here somewhere, and ideally we want to see the market come back to that level to close pretty much in line with where that structure had started, right? Once that is done, we may potentially then see again the market giving us another W structure, and once price closes above that neckline, then we would wait for the market to come back to the neckline to give it a test again, and at that point is where I would look for potential buy opportunities, right? And I also want to mention in closing that remember, when it comes to these patterns, what happens is, as I said, traders and investors sell on that second leg, and they place their stop losses here as well as there, right? So we can see that we actually have a lot of money stuck at those two levels, right? And in the future, we will indeed see the market, in my very humble opinion, move all the way to those levels to grab that liquidity. As I always say, that liquidity is money, and the markets will always go to where the money is.